All right, everybody. Good afternoon. Welcome to tonight's webinar, How to Swing Trade with Confidence. Hope everybody's doing well. Happy Good Friday Eve. I know everybody's ready for a nice 3-day weekend. Just a reminder, our offices are closed tomorrow. We will resume normal business hours on Monday. Stock market's closed tomorrow as well. So nice 3-day weekend for us all. Quick sound check just to make sure I'm coming through okay. You guys can see my screen. I am streaming live on YouTube as well as GoToWebinar. So welcome everybody. Quick little sound check. There we go. Thank you, Peter. Appreciate that. Thank you, Kenneth. Yes, it is recorded, guys. You'll get a recording sometime later this evening. Okay? So yes, you can review it sometime this evening and over the weekend, of course. I'm Jerry D'Ambrosio. I'm the manager of educational content here with VectorVest. 3 months from now, it'll be 20 years since I joined the VectorVest team. My main role, one of my main roles, is our swing trading coaching group main coach. And some of you guys are members. I see some familiar names in the role list there. So welcome aboard, everybody. Welcome here. We've got a lot to cover today, and I really want you to stick with me to the end. We won't be together long, maybe about an hour at the most. But if you stay with me to the end, I'll share with you a copy of today's slides. I think these are helpful. While you're reviewing the recording, you can kind of go through, take some notes. I would suggest taking notes anyway along the way. But you will get a copy if you stick with me to the end of today's slides. Just somebody remind me at the end. I do sometimes forget, get through so much content, get on a roll, and you kind of forget towards the end. So let me know at the very end, and I will put these slides in the handout section of your GoToMeeting control panel. So your GoToMeeting control panel where you can type in questions, you should see a section there that says handouts. You'll see the PDF that I upload to that section there later on. Okay? I'm excited to have you here today. Today we are going to discuss 2 continuation chart patterns, the ascending and descending triangles. 2 of the most powerful tools, I think, in a swing trader's arsenal. But before we dive into the technicals, I want to start by addressing something that may be holding you back from becoming a consistently successful trader. Rhetorical question, but just think about this. How many of you have ever looked at a chart in hindsight and thought, I knew that was going to happen, but I didn't take the trade? Or maybe you've entered a trade with confidence. It was a great setup, you had the market conditions in your favor, but you second guess yourself and you exited too early. I've done that before. And you've watched the stock take off without you, right? Or even worse, you found yourself caught in a pattern of inconsistency. Some trades work, some trades don't, and you can't quite put your finger on why you're struggling to get better at this. The truth is, most traders who struggle with consistency aren't lacking knowledge. They're lacking structure, a proven system, and confidence in executing it. And that's exactly what we're going to work on today. Many traders see patterns, lower highs, higher lows, range bound price, where you're kind of bouncing back and forth between these 2 zones, resistance and support. They see these patterns, but they hesitate to pull the trigger because they don't fully trust what they're seeing. Others enter trades but don't have a structured plan for when to exit, leading to emotional decision making. So a lack of clarity on when to enter and when to exit. Fear of losing causes traders to exit too soon. Maybe you got a small loss. You don't want to dig yourself too deep into a loss. You haven't reached your stop criteria yet, but you say, no harm, no foul here. Let me cut my losses a little bit too soon. Greed leads to holding on too long. If you've reached a profit target, and that's really what swing traders, they rely on this stuff. They rely on profit targets, they rely on stop losses, and they follow them to a T. Okay? Greed leads to holding on too long. Once your profit target is reached, you have to take action. Impatience makes traders jump in before the pattern is fully formed. So no confirmation. Okay, you're still consolidating. You haven't truly broken out yet. There's been no clear winner between, either the bulls or the bears. So letting emotions dictate trading decisions. Many traders win, but they give it all back on a few trades. They either risk too much, setting themselves up for emotional pressure, or they risk too little, making it impossible to grow their account. By the end of this session, you'll have a repeatable process that you can apply to your trades immediately. Whether you're trading stocks, ETFs, options, it doesn't matter. But just a final thought before we start. Consistency isn't about being right all the time. You're not going to be right all the time. It's about having a process that gives you an edge over time. So if you've struggled with inconsistency, this webinar is designed to change that. Knowledge alone, though, won't do it. You need to commit to applying what you learned today. So I encourage you to take notes, ask questions. Most importantly, take action. Start putting what I go through here today into practice come Monday. Okay? All right, let's get into it. Today we're diving into two of the most powerful chart patterns for swing traders. The ascending and descending triangles. Triangles in general are great patterns to identify because they identify consolidation. And consolidation generally leads to a big move, whether up or down. We have to be there for it when that happens. Okay? These patterns are commonly used by traders to identify potential breakouts or breakdowns, helping them enter high probability trades. And by the end of this session, you'll have a solid understanding of how to trade them effectively. Okay, so let's start by defining what these patterns are and how they work. Triangle patterns provide traders with well-defined setups, making them excellent tools for both beginners and intermediate traders. Okay, they have baked in exit criteria, clear entry points, clear exit points, reliable risk to reward ratios, and they're visible across multiple time frames. You can look at intraday charts, weekly charts, daily charts. We're going to focus only on daily charts here today, but they are visible across multiple time frames. And when used correctly, these patterns can greatly improve your consistency. That's what this game is all about. A lot of times we focus on the end results, right? I want to make 20% a year. I want to make 15% a year. And the journey isn't even considered or thought about. It's going to take some time and some practice and some education to get you to that on a consistent basis. Hey, S&P goes up 15%. You don't make 15-20%. There's something wrong. But if the S&P doesn't go up that much, how much are you still making? For example, this year the S&P 500 is down about 3 or 4%. In my swing trading coaching group portfolio, I'm up 17, playing the market up and down as it kind of develops, using things like this, using short-term technical setups. So it is possible. You just got to be able to do that on a consistent basis. Let's start with the ascending triangle. This pattern is categorized by a flat resistance level and rising support. Buyers step in at higher prices, creating a series of higher lows, while sellers hold the price down at a resistance level. Eventually, the buying pressure outweighs the resistance, leading to a breakout. So here's a diagram of what the ascending triangle pattern looks like. We'll look at some chart examples in a moment. Okay. Horizontal resistance zone there. So there's selling pressure. Let me create a little. I don't want to do this. I want to do this. I want to create a pen. So selling pressure, selling pressure, selling pressure. 4 retests of that resistance zone. Sellers dominated at that zone, right? Pushing prices lower. But at the same time, buyers were coming in and picking up shares at higher prices. It wasn't this horizontal support zone where you're kind of range bound and channeling. You're ascending. Your lows are ascending, while a horizontal resistance ceiling, if you will, is being established. This has bullish implications because of the higher lows that are being put in. Just because it has bullish implications doesn't mean that you take the trade anywhere in between this consolidation period. I've seen a lot of times where the sellers winded up really smashing price at that resistance zone, and the trend broke, and the stock went in the opposite direction. You wait for a breakout. Okay? The breakout happens, and more importantly than just an intraday breakout is a closing breakout. You want the stock price to close well above that resistance zone there. Okay? That tells us that the bulls won, the bears threw in the towel, and you got a really strong move above resistance. And I want that strong move to be accompanied by high volume. These are the earmarks of an ascending triangle trade. You have to have all these things lined up, because if they don't all line up, you shouldn't take the trade. For example, let's say you get a breakout above resistance, but it's on really low volume. Really low volume. It's not a very strong breakout. Even if you do get the breakout, what you look for the next day is follow through. You look for follow through the next day. You don't take the trade on the breakout day, intraday, you wait for follow through the next day. Okay? So there's your confirmation. There's your entry. Your entry is you wait for the breakout above resistance and you take the trade that following day on follow through. Okay? Daryl's asking, will these screens be shared or emailed? Yeah, you might have joined us late, Daryl. I will be giving you these slides at the end of today's session. Yes, if that's what you meant by screens. You take the trade. There are two other components here, right, in your trading plan. The three components are: when are you going to take the trade, and what confirmation looks like. Okay. When are you going to sell at a loss, and when are you going to sell at a profit? You sell at a loss after you take the trade if ever the price falls below the last higher low within the period of consolidation before the breakout. So in this case, it's right here, right below that last pivot, that last higher low. You're drawing these lines, by the way, on the chart when you see them. So you see resistance, you draw a horizontal line here. You see higher lows put in, you draw an extended line that connects and touches those higher lows, creating that triangle pattern. And that last, you get the breakout, and the last low within that triangle pattern is where you put your stop loss. Your profit target is measured by the width of the triangle, and I like to kind of just stick right in the middle. Measure that area there. You take this price, you subtract it from this price, you take the difference and you add it to the closing price of the breakout candle, and that is how you set your profit target, also known as a measured move or an expected move. It's the width of the triangle. So let's just say this price down here was 20 bucks, this price here was 30 bucks, the difference is 10. You add $10 to the closing price of the breakout candle. So if the closing price of the breakout candle here is, let's say, 32, your profit target would be 42. Okay? That is it. That is the setup. And again, let's look at a couple examples here in a moment. Whoops, what am I doing? Okay, let's do this, let's do that, and let's do that. Okay. All right, let's talk about some key characteristics. Let's review. Few key characteristics define an ascending triangle. First, price forms a strong resistance level, which acts as a ceiling. Second, buyers continue stepping in at higher levels, forming higher lows. Volume typically declines as the pattern forms and then expands once the breakout occurs. Recognizing these characteristics will help you spot high probability setups. To trade an ascending triangle, wait for a confirmed breakout above resistance with increased volume. They go hand in hand. Okay? Enter a long position once the breakout candle closes above resistance. Okay? So you're entering the following day on confirmation after a strong close above resistance. Place your stop loss below the most recent higher low, And your profit target can be estimated by measuring the height of the triangle and projecting it above the breakout point. So here's KGC. Let me draw here as well. Okay, here's your ascending triangle, and let's just pretend right here first is the hard right edge. Okay, resistance, another retest, another retest. Okay, higher low than that. Stock price pulled back here and then rallied, so you're kind of circling that area here. Just so happens that if you take an extended line, you start there, it touches there, and it also touches there. So there's your 3 higher lows that have been put in where buyers are coming in and buying shares at higher prices. At the same time, again, sellers are pushing price. We're probably looking at about 9.25 here, pushing price lower from that level. Eventually, buying pressure overcomes selling pressure and the stock price closes strongly above that resistance level. Happen to be on pretty good volume as well. And by the way, for the most part here, you had lower volume. I know there's some big bars along the way, but right towards the end, before the breakout, generally you had some lower volume, right? Then you had a nice big volume spike there, right there, on some really good volume. The next day is when you take the trade, though. That is when you take the trade on follow through. Okay? Stop loss is right below the last higher low before the breakout. That is where you set your stop loss. Okay? Profit target I would just kind of take that, whatever price this is, looks like about $8. I subtract it from this price, about 9.25, so that's $1.25. I'd add $1.25 to the closing price of the breakout candle, which is about maybe $9.75. So about $11 is where you would set your profit target. So I'm going to take you through, guys, because this sometimes happens. You know, what would the ideal situation be? The ideal situation would be a breakout, you take the trade, it moves immediately to your profit target with no hesitation, and you take profits, and it's a perfect trade. It doesn't happen all the time. What happened here after you took it is the price fell for the next 3 days. But look at where it stopped. Right? So this resistance zone where price had a hard time breaking above for 3 times in a row there, that resistance becomes support. So then price breaks above it, and then immediately what you get, and sometimes this happens, is an immediate retest of support. That retest of support and subsequent retracement off of it gives you an opportunity to leg in, scale in, and buy more. Okay? Maybe you take a starter position, a smaller position on the breakout, and if you do happen to get a retest of support, you buy more on the retracement off of support. So could have done that here. It actually retested a few times during this period, so it didn't immediately explode after we took it. It broke above resistance, but then came back and immediately retested support, actually 3 times. Then eventually broke out, and look at where it stopped here. Look at where it consolidated, right below $11. Okay? Let's talk for a second about what you can do when your profit target is reached. When your profit target is reached, you could close half of the trade. You could, of course, close the whole thing, take profits, move on, but you could close half. The stock's in a pretty good uptrend, right? So maybe you feel if the market conditions are in your favor, you feel like the stock has continued upside, you want to take profits because that's what you're supposed to do when your profit target is reached, but you want to leave some on the table. You want to leg out in such a way where you can't lose on this trade. So for example, let's say, just keep it round numbers, let's say you reach your profit target, I make $1,000. I'll close half. I'll sell half my shares, I'll book $500. It's yours now. Okay? It's available cash in as buying power. But you have $500 left. So you have a balance of $500 left. At the very minimum, you take your initial stop, which is below the higher low, and you raise it to your cost basis. so that if the worst case happens and price falls back below or to your cost basis, you close that trade, you close the balance, which winds up being what? A wash, right? You didn't make any money on the second half, but you did book 500 bucks, so you have a net winning trade. One guideline that I've been following in my swing trading coaching group is we have a rule here at VectorVest: don't give back more than half of your profit. So what I've been doing is when my profit target is reached, I take half off and I raise my stop so that I don't give back more than half of the balance. So in this example, if I took 500 bucks off, I had a balance of 500, I would not lose more than 250 of that balance, and I'd close. So worst case is $750 profit of a potential 1,000. So I made 75% of my 100% profit, which is again at your profit target. Okay. Here's another one. This one hadn't broken out yet. Okay, so here's resistance. Here's resistance. Stock is in an uptrend though. I mean, not technically an uptrend because you do need higher highs for an uptrend. But look at the higher lows that are being put in. That's higher than that one. That's higher than that one. Buyers are coming in and they're buying shares at higher prices time and time again. Okay, we're still consolidating though. We haven't quite broken out yet. You got this, 84 and change resistance zone that you got to contend with. Look at what's happening too with volume. How that's drying up as we get closer and closer to kind of the apex of that triangle. Fast forward. There were the two resistance touches. Here was your breakout. There was your breakout. Okay. Again, here were the higher lows. We just looked at this chart, but now we're fast forwarding, and there's your breakout. Same thing happened here that happened with the previous stock, KGC. You got your breakout, you got your confirmation, okay, and the price almost immediately came back down and retested support. Well, let's first talk though about where you're setting your stop when you take the trade, right? You're setting your stop right below the last higher low within that triangle pattern before the breakout. Here I would kind of split the difference right in the middle. I'd set my profit target like that. Okay, meaning I'd take this price, I'd subtract it from this price, and I'd add it to the closing price of the breakout candle, which looks about right there. Right, that line is just about as long as that one. That's how I would set my profit target right there. Stop loss, confirmation level, profit target. Got it. Everything's covered for you. You're never going to wonder, when do I take this trade? When do I get out? It's all laid out for you. So here in this case, again, you got the breakout and then you got the immediate retest, guys. Look at that. Right to the penny, came right back down to support, retraced from it. You could have added to your position there. Where did the stock gap up? Look at where it gapped up. Right at our profit target. We closed. We took profits, right? Maybe you closed the whole thing. Maybe you let the rest run. Okay? If you let the rest run, remember where your cost basis is, right here. Profit target is there. Stop is there. Worst case, you raise your stop to your entry price. I like to kind of come right in the middle there, and I'm not going to let the stock price fall any further than that after I take profits. Okay, we took profits, kind of softened a little bit, but never fell below. We never gave back more than half of the balance, and then if the stock picked up again, and you're just continuing to raise that. So maybe I would say somewhere in that area is where you close the remainder, or maybe even higher. Okay, really good setup there. Okay, now let's discuss the descending triangle. Ascending triangle is more of a bullish pattern. It does suggest it's a continuation pattern. So generally ascending triangles you'll see in uptrends. Sometimes the trends appear to be weakening because there's resistance being established, but then you get the breakout and the continuation. Descending triangle is just the opposite. It's the opposite of an ascending triangle. Here the price forms a strong support level while sellers continue pushing the price lower, forming lower highs. Once support breaks, the pattern typically leads to a significant price drop. Need strong volume too on the breakdown. Here's a diagram. So consider, kind of imagine you're in a downtrend here. Stock price is downtrending, but buyers are setting up camp right at that level. At the same time, sellers are pushing prices lower and shorting shares, selling shares at lower prices, putting in some lower highs. Okay? Here, this pattern here suggests a breakdown. Doesn't always happen, but it suggests a breakdown. You wait for the price to break below and close below support. Then you wait for confirmation the next day. Your stop loss, just kind of the opposite of the ascending triangle. If you're taking this position short, you set your stop loss right below the last lower high before the breakdown. Remember that breakdown, I want to see strong volume. It'd be big volume bars. Generally, volume is going to be kind of low towards the end, and then big breakdown below support, big volume day, confirmation the next day. The measured move or your expected move is the same. Kind of take the middle part of the triangle. I take that price, I subtract it from that price, I take the difference and then subtract it from the closing price of the breakdown candle. Okay? Like the ascending triangle, this pattern has distinct characteristics. A descending triangle features a strong support level that repeatedly holds until sellers eventually overwhelm buyers. Lower highs indicate increasing selling pressure. Volume declines during the formation and expands on the breakdown. Understanding these characteristics allows traders to anticipate price moves more efficiently and puts them in position to act and to profit, as opposed to waiting too long after the breakout or the breakdown. We need to be there as soon as it happens and take action there. And the psychology behind these patterns is fascinating, in my opinion. With an ascending triangle, buyers are in control, creating higher lows as they push the price towards resistance. Eventually, they overpower sellers, leading to a breakout. In a descending triangle, sellers dominate, pushing the price down until buyers can no longer defend support, causing that breakdown. Understanding these dynamics help traders just make more confident decisions. Okay? Market conditions play a crucial role in the effectiveness of these triangle patterns. While there's no one market timing system that you should be following in VectorVest, here's kind of a rule of thumb. MTI above 1, confirmed up call, maybe even a DEW up situation. You want to look for ascending triangles. You want to look for stocks that are in strong uptrends, that where the sentiment is bullish, maybe consolidating a little bit, but then eventually wind up breaking out because market conditions and market trend are supporting that breakout. Okay, so ascending triangles work best in strong uptrends, where momentum supports the breakout. Descending triangles are more reliable in weak or bearish markets where sellers have control. MTI below 1. Confirmed down call, DEW down call, red lights in the price column of the color guard, primary wave down. Okay, those are situations where you want to look for descending triangles as possible shorting opportunities. So you're always considering the broader market context when trading these patterns. For a descending triangle, let's go through the rules. Enter a short position or close a long position. If you happen to be in a stock long that's forming a descending triangle and it breaks down, that should be a signal to close that long position. Okay, but for to enter a short position when the price breaks below the support level with strong volume, your stop loss should be placed above the most recent lower high and target the projected move by measuring the triangle's height and applying it below the breakdown point. Okay, so here's DHI, DH Horton. Here's a classic descending triangle. Okay, stock is in a downtrend. However, the lower lows that were being put in, that halts, that stops, and buyers again are kind of setting up shop right at this level and supporting the price from falling any further than here. At the same time, lower high after lower high. So sellers are really dominating here and squeezing price into this apex of the triangle. Okay. Oops. Let me go back. Actually, let me get into the program here real quick because I want to show you a couple of things. Whoops. Okay. Let's go to the graphs real quick. Let's go all the way back. Okay, hold on. All right, let me clean this chart up a little bit. Get RT off, 10-moving average off, that off, that. Okay. So if this were the hard right edge here, we're looking at March of last year. I'm seeing a downtrend. I'm seeing a new low that put in a little mini rally here, and then the stock price retested the old low, but then pushed off of it. So I'm not seeing lower lows here anymore. So what's happening is a floor is being established. So I'll take a horizontal line there and I'll draw it right at the bottom. I'm still seeing these lower highs being put in. But again, another retest. I'm not seeing lower lows. It's your classic ascending triangle. I'm sorry, descending triangle. Right? Look at how volume is beginning to dry up here as of this hard right edge. This is what you have to recognize. Price went up for 3 days and volume dried up for those 3 days. That's not bullish. This suggests a bearish breakdown. Another retest though of that trend line. Right? Look at that long upper wick. Big volume day that day. Another retest. Man, price getting squeezed tighter and tighter. Look at that. And then you get your breakdown. Immediate retest of the zone, but then price moved a little bit lower after that. You see that breakdown there? Who won? What a battle. What a battle was raging on, right, during this time period. Look at volume for the most part and how it dried up. And then you got your breakdown below that support level. That is bearish. Okay, here's another ascending triangle here. Lower high, failed to break above the recent high, another lower high. Man, look at this support zone. By the way, this used to be resistance, this zone right here. 1 touch, 2 touches there before the breakout. So this used to be resistance, and then of course, like I said, it becomes support. 1 touch, 2 touches, 3 touches, 4 right at support. Lower highs are being put in, and then your breakdown. Whoops. There's your breakdown. And it reached your profit target too, because I would have measured kind of right in this area there. There's your breakdown. Look at where it stopped. Look at where it stopped falling. Right, you basically reached your profit target there, right? Because I would have measured, if I would have taken this position short on the breakdown, I would have used this higher low here as my stop. I know that one big candle there, there's the high there. I would have used this zone right here as my stop on a short position, and I would have measured the width of that triangle, projected it out below the breakdown price, and look at where it stopped, almost to the penny before it rallied. Okay? False breakouts. Let's talk a little bit about them because they will happen and they can be frustrating. But they can be avoided by waiting for a candle close above the breakout level. I've seen so many times, and I've been tempted too before. You get a strong breakout above resistance. You want to take the trade that day, and I've done it before, and I've also resisted before as well. A lot of times I'll see price retrace and kind of revert back into that zone and not close strongly and leave this long upper wick at resistance, and then price breaks down after that. You need a really strong close, okay, above resistance. Confirm that move with volume. and use some supporting indicators. You can use RSI, MACD to strengthen your conviction. So for example, you got a strong bullish crossover above resistance, you got a rising RSI, you got a bullish MACD. Those are all confirming that move. Avoid trading in choppy market conditions when breakouts are less likely. Okay, we want trends rather than sideways type markets. Risk management is key too. Never risk more than 1 to 2% of your account on any trade. Never. It's a non-negotiable, non-starter. You don't risk more than 2% of your account on any trade. Okay? Adjust your stop loss. Also, you can use the ATR to prevent unnecessary stop outs. If the stock is too volatile, you don't want to keep a tight stop, so you can help you and use ATR. Prioritize quality setups over frequent trades. Don't settle for, oh, this kind of looks okay. The breakout was okay. Make sure everything kind of lines up. You want to give yourself the best probability of success. Let me show you guys real quick a little position sizing calculation and a way to size your position. Because every position that we take has to start with defined risk. Your defined risk on any trade is between 1 to 2% of your account value. So for example, if I got a $50,000 portfolio, I'm not going to risk more than $500 to $1,000 on any one trade. I like to live right in the middle there, 1.5%. So let's do the math. Let's just say I got a $50,000 portfolio. What's 1.5% of 50 grand? $750. That's the first figure number I punch into my calculator. That's my defined risk on this trade. Let's say stock ABC, I got an ascending triangle pattern. I see where my breakout is, right? Let's say you get a nice breakout above resistance. You know generally after that breakout what your cost basis is going to be. What your confirmation price is going to be. What your cost basis price, not dollar amount, but price per share. Let's say you got a strong close at 35, right? Maybe resistance was 32. You got a strong close at 35. You know you're not taking the trade any lower than at 35 bucks. So maybe it goes a little higher the next day. Maybe you take it at 36. Your stop loss was 31. That's $5 of risk. Let's keep the math simple. Your stop loss was 30 bucks. That's $6. 36, 6, 3. What is that? About 12%? Let me do something here. Whoops. Let's see. Hold on. Let me pull out my trusty percentage calculator here. If I buy at 36 and my stop loss, and my stop loss is 30, 17%. That's a 17% stop loss. Okay? I take my risk, I divide it by 17%, and that spits out a cost basis of $4,411. If I want to know how many shares I need to buy, I divide that by my cost, by my roughly cost per share. I like to work in terms of cost basis because in RoboTrader, which is the tool I use in VectorVest, that's what it takes. You punch in your investment and it automatically calculates how many shares you are to buy. So your risk, your fixed risk, 1 to 2% of your account value, divided by the max percentage loss on that trade, could be different. Every stock is going to be different. Some trades are going to be lower risk, some trades are going to be higher risk, and the lower risk trades is where you can leverage up and buy more shares. The higher risk trades is when you have to reduce the size of your position so that you're not outside of your non-negotiable risk per share, risk per trade going in. Okay? Hold on one second. Okay. We talked a little bit about scaling in and out of trades. Scaling in allows you to add to winning trades, while scaling out helps secure profits. So if you enter on a breakout, you can add on successful retests and exit at key levels to maximize those returns. Exit when price reaches your target. Why set a profit target if you're not going to take action at that target? Okay, you don't have to take the whole trade off. You could take half off and use some of the guidelines that we went through earlier. Raise your stop from its initial level to at least your cost basis, and then higher, and trail that higher as price continues to move higher. Avoid premature entries. Do not trade within periods of consolidation. Wait for the breakout to confirm the move. Another common mistake: ignoring volume. Okay, just breakouts, any old breakout has to be on high volume. Rising price on lower volume is not bullish. Okay, don't trade against the market trend. Don't look for stocks to short in a bullish market. Don't look for stocks to buy in a bearish market. Always, and also using stop losses that are too tight. Okay, and then stick to high probability setups. So some key takeaways is ascending triangles signal bullish breakouts. Descending triangles signal bearish breakdowns. Always wait for confirmation and use proper risk management, and stay disciplined in your approach. Okay? Listen, we just went pretty deep on how to trade these breakout patterns. You now see how powerful these setups are. Let me show you guys something here. I mentioned this earlier. My swing trading coaching group portfolio. In this portfolio, I trade a lot of different technical setups. If I see a flag pattern breakout, I'll trade it. If I see triangles, I love triangles, I'll trade them. I use a lot of other techniques that we teach in our swing trading courses. Trade Like a Pro, Mastering Moving Averages. This portfolio this year so far, almost 20% year to date, 17% total. The S&P is down about 3%. This is a swing trading portfolio that trades triangles. They absolutely work. But let's be real. Okay, you see how powerful these setups are, but knowing this is one thing. Executing it consistently, profitably, and with confidence is another. That's where most traders fall short. So what I want to do is I want to give you guys all the answers. I want to take you through a journey of learning how to trade continuation chart patterns, reversal patterns, chart patterns that some of the most successful professional traders use today. It's exactly why I created this course. It's designed to take you from knowing breakout patterns to actually mastering them and trading them, stacking the odds in your favor and building real consistency in your swing trading. Okay, here are the modules. This is a live class coming up. We start next week. I'll go through the dates in a moment, but when you do register for the course, I'll tell you all about that in a moment. These modules here are all pre-recorded. You go through them all, you watch them. It's like Netflix, I like to say, because you can watch as many of them as you want, as much as you want. We will begin our live mastery sessions here just starting next week, and I'll go through those dates. This isn't just information, guys. It's a complete structured process that helps you finally trade with clarity and confidence. Now, because you joined this webinar, I'm offering an exclusive deal. This offer is only available for the next few days, and once it's gone, it's gone. So instead of $995 for the next 7 weeks, we knocked it down to $495. And what I'm going to do right now is I am going to put that website that you see at the bottom there in our chat box. And I can't talk and type at the same time. Well, maybe I can. I just don't want to misspell it. www.vectorvest.com/PST, Precision Swing Trading. Okay, I just typed it in the address in the chat box that you guys see there, so you can just click on it. If you're serious about getting better at this and leveling up your swing trading, click on the link in that chat box. Grab your spot, and let's work together over the next 6 weeks. So here's the agenda. Here's our schedule starting next week, April 8th. All 6 of those modules that I showed you guys earlier, they're pre-recorded. Okay. We will be doing live mastery sessions. We start on Wednesday, April 8th. Each of these sessions begin at 1 p.m. Eastern Time. They are also recorded and uploaded to the university course outline, pretty much within 24 hours after each session. Myself and Steve Chappell. Steve is the Director of Trading Systems Development here at VectorVest. He and I will be your instructors, your coaches here for this live, for these live mastery sessions. Okay, so it is 6 weeks. There will be a bonus session which I'll mention in a moment. Now, if you don't already have VectorVest 7 Premium, which is our real-time data, we're going to give it to you for 70 days. It has all the tools that you need to get the most out of the course. We will be doing a live bonus session as well. It's called How to Short Stocks with Confidence, talking about the different types of shorting candidates we could consider in a bearish market. That's on May 20th, and that session begins at 1 p.m. Eastern Time. By the way, just wanted to let you know that this is 100% money back guaranteed. You go through the course. If you're not satisfied, you can get your money back. This is completely no risk here. You got to do the work, though. We know if you do the work or not. We can see it on our end, because I know if you do the work, you'll see the results. My portfolio, guys, speaks for itself. Steve Chappell's portfolio is up 19%, almost 20% so far this year. He made 40 last year. I made 39 last year. These swing trading techniques work. Okay, so go to vectorvest.com/PST. This $4.95 rate is only available for a very short period of time. The elite pricing, Charles, is the same. Once this price goes away, the price for everybody else goes up. It never goes up for you or for an elite member. It's always the same. Okay, so let me do this. Let me put the handouts. There it is in the, whoops, nope. There we go. In the handout section of your go-to webinar control panel, in a moment you should see a PDF called How to Swing Trade with Confidence. Okay, click on that, download it to your computer. You'll be getting a recording later this evening, so you can go through it and then kind of line things up with that PDF. All right, guys. I enjoyed today. I love teaching this stuff. The performance speaks for itself. These things work. You got to learn how to do it, and that's what we're here for. So have a great rest of your weekend, everybody. Happy Easter to everybody. My email address is jerryd@vectorvest.com. If you have any questions about anything that I went through today, shoot me an email. Otherwise, we'll see everybody on Wednesday next week for our first Mastery Support Session. Have a great weekend, everybody. We'll see everybody soon.